Greetings, everyone. Thank you for joining me today on this stock pitch presentation for Delta Airlines. You may have heard airlines go on the news anytime there's a big world event, anytime a war is happening, anytime a terrorist attack happens somewhere, anytime that regulations are being imposed because of the pandemic, as it's been very common for the past 2 years ever since COVID began. As a result, there are a lot of factors that go into play when deciding if one should invest in an airline stock. In this case, the report and its subsequent analysis is going to focus on Delta Airlines. So let me just share the screen with you guys, and that's going to be like a little aid for me as well while I share. Awesome. So let's begin at the top and let's answer some of the important questions. Is the security traded in the US? Yes, this security is traded in the New York Stock Exchange with the name DAL. Those, if you know the phonetic alphabet, like pilots and airline geeks know, that's going to be Delta Alpha Lima, DAL, Delta Airlines. A little bit about the discussion of the S&P. It took a hit recently after being at an early high, record high in early January. Different analysts from Bank of America and Goldman mentioned that the S&P 500 could have dipped into the bear territory. That has been avoided. Apparently, the market has stabilized a little more after some policy action by the Federal Reserve. It is expected that they're going to increase interest rates at an accelerated rate in order to curb inflation. They do have an extra challenge because it is possible that the economy might fall into stagflation, which means that there's no growth, but at the same time, price levels are increasing, the inflation is increasing, and that is terrible, as you may believe. In the S&P 500, also widely considered one of the best gauges in the U.S. equity market, captures 82% of the country's equity market, and it has been taken hit recently, but it's slowly recovering. It's also connected to the stock Delta joined the S&P 500 back in the year 2013. At the time, it was only the second airline to be part of it after their competitor, low-cost carrier Southwest. If you're interested, you can take a look a little bit on the bond yields. Recently, it was a lot in the news that the yield curve had reversed, which is an economic indicator for a recession coming on, but that has slowly been steadying as well, returning back to normal. Furthermore, overall market inflation. So when I was working on this report originally, it stood at 7.9%. It's a little higher now. Spike, as mentioned here, had been the sharpest since 1980s. The inflation kept increasing and it's up to 50-year highs, something hadn't been seen since the 70s. A lot of that is due to the recent explosion in prices as a result of the conflict in Eastern Europe, the Russian Federation, and Ukraine. It's affecting the price of oil. Its cost of business is going up. Prices are going up. Not looking good. Or wasn't looking good. But the economy is in its way to recovery, and hopefully it'll stay in the green. Here is a little bit of the current political issues. As you know, the largest right now is the war in Europe between Russia and Ukraine. Russia, one of the biggest exporters of petroleum, has cut some of its supply. As a result, prices have gone up. Oil tends to be the largest cost for an airline, given that it's basic for their operations. They need it to operate their planes. So that is something that is increasing and might be cutting into the profits of the airline of Delta. The company, if you read the 10K, they provide scheduled air transportation for passengers and cargo throughout the United States and around the world. Talks a little bit about their hub system as well. You can further read into that a little later. In addition to that, they also have their own refinery, which defines them. It differentiates them from many other airlines in the market. They are a little less vulnerable to suffer the effects from petroleum, given that they are able to counteract a little bit that with their own refinery. So that is something to take into consideration. Passenger revenue for the last quarter, that would be Q4 of fiscal year 2021, was up 168% compared to the year before. I mean, the year before is not a great example either, because that was the year that COVID hit and there was no traveling, or almost no traveling. So, but yeah, it's a positive metric. Still 20, if you compare it to the same quarter, Q4 of fiscal year 2019, it's a 29, it's still 29.3% below, but it's on the recovery. It's on the recovery. Cargo revenue was 304 million, 49% in greater than compared to a year ago, but still, yeah, and 62.2% of the same compared 3 months period in fiscal year 2019. And finally, from the refinery, 1.9 billion, rising to 79.7% compared to the year ago, and up 91% from Q4 fiscal year 2019. Passenger revenue also accounted for more than 76% of the company's total revenue during that quarter. Cargo was 3%, and the rest, or 20%, was the refinery. You can take a look here at the earnings per share of the last 6 years as well. It had been increasing and decreasing. It took a big tumble in this is quarterly, took a big tumble here in 2016, slowly recouped, another tumble in 2017, slowly recouped, took a tumble in 2019, it increased a lot in Q2 and Q3 of 2019, took another dip in Q4 of 2019, and then COVID hit. You can see those big outliers there: negative $9.01 and negative $8.47 loss on quarterly EPS. But it's shortly going back up. You can see the negative 0.64 there. Delta kind of explained it because of the snowstorms that hit the US and other supply chain problems that they had. Revenues, asset and liability growth for at least the past 3 years. We have all the way back to 2018. You can see some growth in revenue from 2018 to 2019. Same with assets and liabilities, some growth as well. However, when you take a look at 2020, of course, took a major tumble. Revenues were a little over one third that they had been the year before. The assets did increase, but so did the liabilities. So it tends to even out. And then revenues are slowly increasing in 2021. This is yearly, by the way, these are not quarterly. Assets remained almost the same. They increased about $500 million, and then the liabilities went down, which is positive. Right? It's positive for the economics of the airline. Significant changes in any of the items, as I previously mentioned, it's mostly due to COVID. Recent repurchase, bond issue, or stock issue. In the height of the pandemic, Delta issued $9 billion worth of bonds in order to finance their operations. And in 2021, once they had stabilized their cash flows, they offered to buy back $1 billion. In addition to that, just like many airlines had done since the early 2010s, Delta bought back $11.5 billion worth of their stock between 2013 and 2019. Stock buyback is when the company buys back its own stock, it decreases the supply, it artificially inflates the price of the stock. This was heavily frowned upon by Congress when they approved the bailing out of the airlines, because they argued for the past 10 years you've had positive cash flows, but instead of saving up that money and increasing your liquidity, increasing your cash reserves, you decided to artificially inflate your own price. We can take a look here at the daily candle chart. I have a small explanation of down here in case you're still in case you still don't understand too much what a daily candle chart is. Little summary of the past year. The stock has decreased in value by 19.89% since this time last year, which puts us at a perfect position to buy right now. And now talk a little bit about later as we move on through the report. We also have another key metric here, the 200-day moving average and the 50-day moving average, with the 200 being the orange and the 50-day being the blue. You can see a golden cross just going on right now in mid-April. Death cross did occur in mid-July, but in the short-term average, because the short-term moving average indicator remained below. Sorry, that's a typo there. It should be the opposite. It's showing the same one, but I'm going to fix that for the final report. Golden cross happened in early April, as I mentioned. Bollinger Bands, the price level was a little above what it should be. It should be stabilizing soon as well. The moving average conversion diversion, also known as MACD, crossover of the MACD is an indicator that investors should expect a bullish trend, and this stock thus triggering a signal to buy. Other crossovers have been observed in the past, both for bullish as well as for bearish expectations. Relative strength index, it's in the mid 50s, between the 30 to 70 relative strength index, which puts it straight in the middle, neither considered oversold nor overbought. And finally, we go to the final part of the report. We take a look at some of the earnings. So the earnings per share expectation was 0.14, actual was 0.22. It's a positive difference of 0.08. This is a little bit of the guidance. You can take a look at that on your own time. If you have any questions, just let me know. You can also take a look at the withdrawal price there. The last month, the stock plummeted down to $30.11. It would have been great to buy it at that price. With the current price of $39.31, the stock has increased 14% in value since last month. So that is 14% that we did not capitalize on. Delta did a nice Q1 earnings. They were pretty solid. It's shown in the continued increase. So the current price is not hovering between this range. It's not hovering between this range. I believe that our suggestion would be buy and hold. Here are some of the options. Here are some of the reasons, both for and against. Airline market is making a recovery after a little over 2 years. The world is shut down, but now office workers are returning to the office, and with them business travel. So it's a market segment that Delta Airlines dominates, and hopefully is set to pick up. Delta Airlines stock also outperformed that of their airline market competitors. Southwest fell 3.06%, while United fell 1.56%. Delta had recording better numbers than that. Summer tourist travel season is fast approaching, and Delta expects to maintain passenger levels, increase passenger levels, and that should help their cash flow. Number of financial analysts are also recommending Delta as a stock to buy. EPS to be negative 131, which in context should signify that the analysts lack of faith in the stock. Nevertheless, compared to the same last year, EPS last year stood at negative 3.55, so it's doing much better now. And finally, Delta stock outperformed analysts' expectations for earnings per share and various other metrics last quarter. It's believed that this trend will continue for their upcoming earnings call later this week. Some reasons against. Well, the current war being fought between Russia and Ukraine is increasing the global price of oil, which is a key component. The barrel of oil is currently selling for $96.04. Around a year ago, that was $59.70, nearly 60% increase. Inflation in the United States is also taking a toll in the wallet of the citizens of the world's largest economy. They do not have as much disposable income to spend in luxuries like vacations and travel. Next, the hawkish posture of the Federal Reserve, stark contrast to most of the dovish tones that they had held throughout the pandemic, threatens to send financial markets into the red. Fed has signaled that the next hike could be of 0.50 instead of the customary 0.25, symbolizing more aggressive measures to combat aggressive inflation. Aforementioned war in Europe could also make the people scared to travel to Europe, and it's one of the biggest summer destinations, Europe. A lot of customers decide to go there. could have a negative impact. And finally, similar to the bad publicity to the war in Russia, recent plane crashes in China Eastern, as well as documentary that is airing and is trending in the United States, which exposes the shady safety and business practice by Boeing, might dissuade the public for traveling and decreasing demand. Nevertheless, after considering all of this, after considering that the price of Delta, even though last month was still 14, 15% lower, it would be a good choice to buy the stock right now and hold it throughout the year to capitalize on its gains. Thank you for being in this presentation. Thank you for paying attention. If you have any questions, I'll be opening the room for them and I'll be happy to answer them.